Hey guys, what's happening? It's been a long time. So yeah, today I want to do a back testing for Nasdaq, and we're gonna touch on Tuesday, which is this day, on the 14th of um October 2025. So now what can we see here? We see that price has come here. Obviously, we are seeing it with hindsight because of it's a back test, but I just want to show you how I go through back testing my stuff and how I do almost like a review, but this is a back testing. So yeah. So now, as you can see, new days, current new week's opening gap. Now this is from the previous days. That's why I have a regular trading hour close. So from the previous day wasn't able to close it up. So let's not waste time. The previous day wasn't able to close it up. Mm, okay, yeah. So this is where we are. So as you can see, this was Monday's trading, and we traded away from 6:15 4:15 when the market closed, and we didn't really like get to trade back to it. But I had the line down there because the market is that is a gap. Okay, that is a gap that hasn't been closed from 9:30 open. So Monday's 9:30 open is here, and we weren't able to trade or close on this gap. So now you see that on Tuesday before 9:30 we were able to do that, and where we are driving to now is the consequent encroachment of the new week opening gap. Okay, and we are still trading into the the regular trading hour from the previous day, and this is still an order block. So there are too many PDRA metrics in this particular place to tell you that okay, can we see what price wants to do after trading to this place? Because this is 9:30 when so my trading window is usually from 9:30 to 12 o'clock. Okay, most times 11:30. I don't always like because of once it's after 11:30, I'm really not looking to be doing anything because we're already heading to the lunch hour. Okay, so what I can see here now is we have we have sell side liquidity, right? So I'm gonna take that, I'm gonna note that, and we know that we've taken out sell side and we have traded into this PDI. So I'm just gonna go to the 5 minutes time frame real quick. Um, you know me, I don't like making my videos too long-winded. So now, so if we have taken out this liquidity, we have traded here. Where is our possible targets? Okay, where is our possible? I want to go back to the 15 minutes and show you something I forgot. So now, what can we see here? Looking upwards, like for possible target going up. This is buy side liquidity. This is buy side liquidity. Then anything, this is buy side liquidity. Then anything outside here, what is it? We have a BC. So I want to take note of that. Or CB, sorry. I want to take note of the CB. Yeah. Let's make it a little bit bold and put it in the center. So yeah. So we have the 15-minute CB, right? So this is a potential target, but we still have buy side here, buy side here, buy side here before we get here eventually. So we're gonna go lower now. So we'll go to the 5 minutes time frame. All right. So here in the 5 minutes time frame, we can confirm that you see price traded here, still took out this low. Now we're trying to go back up. This is, and then this is CB, but because of we want to go up, it's going to be an IFVG, an inversion fair value gap. So just go to the 1 minute straight up because there isn't much action there on the 5 minutes that we want to see or capitalize upon. I don't know why it's so slow today. Oh my goodness, it's so freaking slow, bro. Okay, so as you can see, sell side swept, traded to the close of the traded fully closed up the gap from the previous day um opening range gap. So that's like the opening range gap. So we fully closed it up. Then, as you can see now, what do we have here? So now, when you see, remember, there is something ICT calls the low resistant liquidity run and a high resistant liquidity run. You want to be in a low resistant liquidity run trade. So trades you want to take, you want them to be low resistance. Okay, and how can you easily identify a trade that can be potentially low resistance? It is when PDRAs are being respected, right? So now, as little as this gap is here, this fair value gap here, as you can see, as little as it may seem, it was respected. Okay, so you see the CB, you're gonna draw this BC, you're gonna draw it out, the BC. So you see that the BC was respected. Then we're gonna look at this IFVG. Inversion fair value gap, it was respected, because looking at this chart, there is nothing that is going to indicate to me now that okay, I want to go short from here immediately. Okay, so I want to see price show me that yes, we are willing to go higher. Okay, if there was, maybe I was looking at SMT or I was looking at something prior, I could go long here with confidence. But because of the information that I have shared in this video, so far so good. I want to confirm that yes, we want to go higher and attack this buy side, and attack this buy side, and this buy side, this buy side, and potentially run into this fair value gap. Then we have the previous days, new days opening gap here. That was like being the highest threshold for where I want to see price reach, to which we eventually got there. But back to what we're explaining. So now, what's we've seen that okay, price is willing. It has respected this PDRA. It has traded away from it. Respected this PDRA, which is the IFVG. Look at where the bodies are closing. The wick does the damage, but the body tells the story. So you see, we traded away from it. The wick is just piercing through, but the body is respecting it. Okay, so I like to see stuffs like that. So now we have this two up close candle, which is going to be a breaker. So we have the low, the high, and the lower low. Okay, so that is a bullish breaker. We could use this one, or you could use the two of them because of its long wick both ways, and price has respected here. There is no need for price to come back to this place. If at all price ever says it's come back, it's not going to trade past the consequent encroachment. If it trades past the consequent encroachment of this IFVG, I am totally wrong. But why I say there is no need for price to even come back, it has respected it, and when it left with this what? What did it leave with here? This is a bullish order block. So it left with this what? Bullish order block, breaker, potential breaker. You know, we want to see higher prices. So what I am going to do, this is in the few situations where I want to use, because of how big and how large it is, I want to use a buy stop for this trade. So I'm going to have something like this. You could draw it like this. Hold up, give me a minute, please. I'm going to take out some of those lines because it's just going to be too messy. Yeah, a bullish breaker. You could do it like this or like this, whichever pleases you, whichever suits you. But this is like the bullish breaker, the two consecutive up close candle after the high low, low high and lower low. When price breaks it away, this is the bullish breaker. So yeah, so this is how you could do it. So you could have a buy stop here, and that's when it was going to work. Or you could, if you are convinced that you want to be in this trade, like Charmaine, he usually like sometimes if he's sure that it's going to go up, maybe he's seen the confirmations, he can buy inside the breaker, and it's going to give him a better risk to reward management, right? So I want to quickly pull up our targets. So my main first objective is going to be here It's going to be here because of these two relative equal highs. So they are too smooth, and I feel like, yes, this is going to be attacked. Okay, so this is going to be my main objective, right? It's going to be attacked. So that's going to be my main objective. This is too smooth as well, but if I'm going to be buying from where I'm buying, then the risk to reward isn't going to be worth it. So I'm not going to be looking at here. I'll be looking at here that I've drawn out. Sorry. Okay, I needed to, because of it's a higher time frame buy side liquidity, I can't be able to see it. So I'm just going to go for the HTL buy side liquidity. This is it. HTL buy side liquidity, so that I can be seeing it from this angle, right? So back to what we're saying. So now we have this breaker. Well, I don't really always, I like to see, to be sure that the market has broken away. So I'm going to be buying, putting a buy stop here. So we're going to have an order here that once price breaks it here, then I'm confident. I don't want to be buying from there. And why I'm going to put my stop here, just at the low of the IFVG, it's because of I do not want to see price trade back there. We have balanced it out because of we're having this price coming to trade into the breaker, trade past the consequent encroachment of the breaker, then the mean threshold of the breaker. They're almost the same thing, but ICT differentiates the terminologies. So consequent encroachment is the 50% of a gap. Okay, so it could be the 50% of a week, 50% of a gap, be it fair value gap, volume imbalance, whatever. So anything concerning gaps is consequent encroachment 50%. While anything concerning other blocks, breaker blocks, you understand this, that's mean threshold. So price is gonna trade past price has to trade past the mean threshold of this breaker, the top of the breaker, the order block, the consequent encroachment of this fair value gap. If price is going to break all these PDI rates, then I'm probably wrong, and I do not want to be in the trade anyway. So that is why I am comfortable having my stop loss just here. Then I'm going to target for here. This is going to give me a 1 to 3 risk to reward ratio. So now that's just for the start. So what you want to do next is you want to get your fib projections to know how far above here can you put your stop, your take profits. So how do you get your fib projections? So you're gonna come here, your fib. Yeah, there are so many videos where he explained how to draw, how to get the measurements for your fib, but I don't want to go over it. So this is a high, this is a low, a high, and a lower low, right? So what do you want to do? You could take it from here, from this swing point to this swing point. Look at how pinpoint this is. Like, look at the consistency. Look at the consistency. Look at the body. Look at the body and the wicks. Okay, so that is why we did that. So now you know that this is where your stop is, and it's perfect for you. If you want to go to 4, you might have to wait a little longer, but this is gonna be good because it's just above the buy side liquidity. So this is where my stop is, my take profit is gonna be. So now what I'm going to do is once price trades above here, I'm going to move my stop to break even. There was no chance for me to pyramid here. I don't see any opportunity for me to have pyramid. If I had taken my first entry here and price for some reason came deep down, I am going to have my entry somewhere around here because from this point to that point is going to be equilibrium. Let me just show you from. So now we have to move back again to the fib. So from here down to here, you see anywhere around here would have been good for entry because of its equilibrium, but above here we wouldn't want to be taking that. So I hope you're not getting this all mixed up, but this is how it's going to be. So once price gets here and takes out this high, stop is going to be moved to break even. Then what you can do, I learned this from one of ICT's execution videos. If you are not satisfied with the risk to reward you had, like the original one that you're supposed to have, which is this, what you can do is, let's do this. So let's assume this is our hypothetical stop loss. Okay, so once price has gotten taken out this level, now you move your stop to break even. And once price is getting close to your target, you take away your take profits, your TP level now. So let's still do this. Let's this be your hypothetical take profits. Okay, stay with me, fellas. So now you take it away. So let's say this was your hypothetical take profits. Price has gotten here. You just following your price little by little. You're already risk free. Price has gotten here. What you can do is you can take this out. Once price gets here, okay. Once it trades away from here and goes higher, you can move your stop loss now to this place. Now, once price trades and goes higher again, like maybe it takes out this play. Let's say you want to run down equity. So price, this is if you want to run down equity now. So price takes out here from here now and goes higher again. Now you are made that amount that you were like this is where your remember this was where your hypothetical take profit should have been. So now you are making that amount risk free. Okay. And price does the same thing, trades lower, trades higher again. What can you do once it breaks and trades to this potential place? What do? You can you can just be calculate. Right now, I'm back testing, so it's easier to say because I'm seeing all this in hindsight. But this is why you have to go into your chart and just keep practicing and keep practicing. So you're not just going to be moving it emotionally because of the figures you're seeing. I know sometimes we do that but like if you want to be really technical about it, you're not gonna move your this thing emotionally because of the figures you're seeing. So if price has gotten here, you know it's narrowly got to this place. It hasn't gotten to there, and you know it's gonna get there. So you could look for a safe place. You already have made the money you needed to make initially. So you look for somewhere safe. So you could say that okay, this is a breakaway gap. Now this is being a breakaway gap. You do not want to see price trade past the mean threshold. The consequent encroachment. I like to mix that up. You don't want to see price trade past the consequent encroachment, right? So you could do this. So you could do this now. The white line is the consequent encroachment. So you could oh fuck. So you could do something like this, and your stop is gonna be here, right? So once price does this, trades past it again, you can move your stop. So this is you. You can move your stop very aggressive. You just keep doing it until probably somewhere around, I think somewhere around here, you probably get stopped out. And this is where you should have exited, but you can't do this without proper practice. Okay, so you were supposed to exit somewhere around here, but with this technique you exited somewhere around here. I'm going to look for the video where he did something like this, and I will just share it. I don't know if I'm allowed to do that. I don't know if I need I don't know, man. I'm just gonna but well, this is it. You could just watch ICT's videos anyways and his execution videos. I'm gonna find a way to target to this video anyways, so you could learn how he did it and maybe get the explanation better. So that's how I backtested on this day, and I've been doing this like throughout the weekend. This is what I've been doing, just backtesting, and I really like the movement here. So I said, okay, let me come out and share it with you guys. So this is how I backtest. If you do not want to use the replay, I like this. I like this style, but I think the replay is better because it's easier. You know, we always like things to be easier, but sometimes, what if the harder stuffs are the one that teaches you the most? Just the thought in my head, anyways. Well, I do like the replay. Sometimes I use the replay. It's easier, it's faster, it feels more practical. It feels like you are actually um trying, you're actually semi trading, semi demo trading, okay? So it feels like that. It feels like we are actually semi demo trading. Let me use that word. But sometimes what you need to see is um you need to see perspective. So what do you think is making you need to see it as it has happened already. Sometimes hindsight is good. Sometimes hindsight is good. It just depends how are you using it. I hope you're not deceiving yourself. So sometimes the hindsight is good. Sometimes you just need to keep showing up every time, doing it, that same thing, repeating. And you're gonna see it in real time, in real motion. So that is why I feel this style is better than the replay feature, because the replay is going to make you biased a little bit because you want to be right. You want to be right. You want to try that stuff and get it. I'm not saying the replay is bad. Like I said, I use it, but it's still okay to still do this way. Like I feel like if you want to get it, you have to do this too. You have to do it this both ways. You have to use the replay, and you still have to trade. You still have to backtest like this because you want to see it. You know for sure that okay, yes, you're already seen it. Now you want to calm down to learn it. But when you're using the replay, you're gonna want to. I don't know if you understand. You want to get what you've done. I've used the replay a couple times, so I know what I'm saying. Like I want to get it right. So I feel like sometimes I do feel like if I don't get it right, then it's basically if I don't get it right, then it's like maybe I'm not getting what I'm learning. So I hope that makes sense to you anyways. But if it doesn't, whatever, man. But that's how I see and internalize it sometimes. So that's that for this backtesting episode. I don't think I've done a backtest episode before, but that's it for now, guys. And I hope this video helps you. Thank you. Be safe.